Right now, as we watch the markets move on this Thursday, November 20, 2025, Cipher Mining Inc., ticker symbol CIFR, is trading at exactly $15.46 per share. The stock is currently showing a robust intraday gain of 84 cents, which translates to a 5.78% upward move so far today. While many market participants are busy watching the usual suspects like Tesla stock or Apple stock, Cipher Mining is quietly orchestrating a maneuver that completely defies the typical narrative surrounding Bitcoin miners. You might see that green percentage and assume it is just another day where Bitcoin prices dragged the miners higher. Or perhaps you think this is simply a technical bounce after a volatile week. That is the expectation, that Cipher is just a levered bet on crypto assets, tethered entirely to the spot price of digital coins. The reality, however, is far more complex and significantly more lucrative. What we are witnessing today is not just a correlation play. It is the market beginning to price in a fundamental structural shift in how cipher mining generates value. We are seeing the immediate aftershocks of a massive strategic pivot that separates Cipher from its peers. While the retail crowd on Robinhood or those managing their Schwab Intelligent portfolios might still categorize this strictly as a crypto stock, the institutional capital flowing in suggests they have realized something else. Cipher is rapidly becoming a critical infrastructure backbone for the artificial intelligence sector. The tension here is palpable. The market expects a miner, but Cipher is delivering a high-performance computing utility. If you are sticking to the old script, you are missing the entire second act of this company's performance. Let's look closer at the trading action we are seeing on the chart right now. The volume today is surging well past the average, indicating that this move is backed by serious conviction. When you see this kind of buying pressure on a Thursday afternoon, it often signals that larger players, funds you might find through Fidelity Investments or Fidelity Wealth Management, are accumulating positions before the wider public catches on to the magnitude of recent news. The stock opened lower earlier this week, but has clawed back significant ground, and today's breakout above the $15.40 level acts as a psychological confirmation for bulls. We are seeing a decoupling effect. While other miners might be fluctuating wildly with every tick of the crypto indices, Cipher is exhibiting a strength that speaks to its new dual revenue model. This is the kind of price action that makes you reconsider everything you thought you knew about the sector. The catalyst driving this re-rating is the monumental $830 million AI hosting agreement with Fluidstack, which we now know is heavily backed by a Google backstop. This is the reality that shatters the "just a miner" expectation. By securing a 10-year deal to provide 56 megawatts of capacity for high-performance computing, Cipher has effectively locked in a decade of stable, high-margin revenue that has zero exposure to Bitcoin price volatility. Investors utilizing Interactive Brokers trading platforms or monitoring Interactive Brokers stock trading data have likely noticed the shift in analyst price targets following this announcement. The deal is not merely a side project. It represents a potential total contract value of nearly $3.8 billion if all extensions are exercised. This transforms the risk profile of the stock entirely. You are no longer just holding a lottery ticket on crypto adoption. You are holding a contract-backed infrastructure asset with net operating income margins expected to hit 85% to 90%. If you are sitting there wondering if you should add this to your SoFi Invest account or perhaps your Fidelity IRAs, you need to understand the mechanics of this pivot. Most miners are caught in a perpetual arms race, constantly buying depreciating hardware to chase a hash rate that gets harder to capture every 4 years. Cipher, however, is utilizing its power capacity, its most valuable asset, to serve the insatiable hunger of the AI giants. Think about NVIDIA stock and the sheer demand for data center space to house those chips. Cipher is positioning itself as the landlord for that hardware. This Fluidstack deal specifically targets the Barber Lake facility in Texas. By dedicating capacity to AI, they are effectively arbitraging their power access. They can mine Bitcoin when it is profitable, or they can lease the rack space to AI firms for a guaranteed fixed rate. This optionality is rare, and it provides a floor to the stock price that pure-play miners simply do not possess. Comment below how many shares of Cipher Mining you currently hold, and let us know if you bought in for the Bitcoin exposure or if you're betting on this new AI infrastructure angle. It is fascinating to see how the shareholder base is evolving from pure crypto enthusiasts to more diversified tech investors. Now, let's address the elephant in the room, the financing. Just recently, Cipher announced an offering of $333 million in additional senior secured notes. When a company raises debt, the knee-jerk reaction for someone using the Robinhood app or engaging in Robinhood stock trading might be to worry about the balance sheet. Is the company in trouble? Why do they need cash? That is the surface-level take. The deeper analysis, the reality, is that this debt is growth fuel, not a life raft. These notes are being used to fund the expansion of the very sites that will generate that guaranteed AI revenue. The debt is secured, yes, but the yield and the terms suggest that creditors view Cipher as a stable borrower. They are raising capital to build assets that will yield cash flows far in excess of the interest payments. This is good debt in the corporate finance sense. It allows them to energize the Black Pearl data center and expand Barber Lake without diluting shareholders by issuing millions of new shares. When you compare this to the broader landscape of online investing, you realize that Cipher is playing a game of chess while others are playing checkers. Many retail investors look for investment help or browse investing sites hoping to find the next 10x crypto play. They often end up in Robinhood fractional shares of companies with no hard assets. Cipher is different. They own the power agreements. In a world where energy acts as the primary bottleneck for both Bitcoin mining and AI training, controlling the gigawatts is the ultimate moat. The Fluidstack deal includes a backstop from Google, meaning one of the largest tech companies in the world is effectively guaranteeing a portion of the revenue. That level of counterparty credit worthiness is unheard of in the mining space. It turns Cipher from a speculative stock into something that could arguably fit into Fidelity mutual funds or conservative Fidelity ETFs focused on digital infrastructure. Let's talk about the operational updates that have led us here. The Black Pearl data center is on track for energization in Q2 2025. This has been a long-awaited milestone. The expectation was that delays would plague the project, as is common in Texas grid buildouts. The reality is that Cipher has executed with surprising precision. The substation work is advancing, and the sheer scale of Black Pearl, targeting up to 300 megawatts, provides a massive runway for growth. Whether that power goes to ASICs for mining or GPUs for AI, the infrastructure is the asset. For those of you who invest online and manage your own individual brokerage accounts, you know that execution risk is the killer of small-cap tech stocks. Cipher's management has demonstrated an ability to navigate the complex regulatory environment of ERCOT, the Texas grid operator, better than most. They understand how to play the curtailment game, shutting down during peak demand to sell power back to the grid, which essentially lowers their average cost of electricity to rock-bottom levels. We also need to discuss the broader market environment and how it impacts CIFR. The Interactive Brokers platform shows that short interest in Cipher has been fluctuating, creating the potential for short squeezes if positive news continues to drop. Bearish traders expect that the halving event from the past and the increasing difficulty of mining will crush margins. They are betting on the commoditization of the hash rate, but they are failing to account for the AI premium. If Cipher can reallocate even 20 or 30% of its capacity to high-performance computing, the multiple the market assigns to its earnings should expand significantly. A Bitcoin miner might trade at 5 times EBITDA, but a data center REIT or an AI infrastructure play can trade at 20 times or 30 times EBITDA. This multiple expansion is the hidden upside that isn't reflected in the current $15.46 price tag. Furthermore, we cannot ignore the ease of access for modern investors. Platforms like SoFi Investing and Robinhood Crypto have democratized access to these types of assets. You no longer need to be an accredited investor to buy into a commercial-scale mining operation. However, with that ease of access comes the danger of herd mentality. Many people buying SoFi stocks or using the SoFi Robo-Advisor might not read the 10K filings. They might not know that